lots of people want to make money trading, lots of people want to become successful at it, but yet very few actually do. That's for a lot of reasons. A couple of, just ones at the top of my head. Strategy hopping, not patient enough, things like that. Not having risk management, not knowing how to trade, not really know what you're doing. And so in this video, I really want to try to give you guys a strategy to work on, to focus on, that's scalable. This strategy is scalable up to at least 100 million. Probably you could push it more, but it's known to be scaled to 100 million dollars. And yeah, so give me your attention for this quick, short video. I'm going to try to condense all of the knowledge into one video. Obviously, there's more than just this video, but I'm really going to try to take the whole broad of the strategy and just really narrow it down. So, first of all, what is the strategy? So, it's swing trading breakouts. Now, it's not swing trading breakouts on a 5-minute chart or on a 15-minute chart. We're not day trading, right? The whole point of this strategy is that you put in the least amount of effort but still maximize your return. So this trading strategy takes about 2 hours a day max. Once you learn everything, and you're not sitting at your screen all day. You're really just focusing on trading the open and then trading the close, and then you have to do some screening and night work, which I'll show that too. Now, first of all, how does this strategy work? So obviously we're on daily and weekly charts. Why are we on daily and weekly charts? Because the big moves happen on the larger time frames. So if you're trying to get 50%, 75, 100% in one trade, that's not going to happen on a 5-minute chart, right? Unless you're trading huge intraday gainers, right? A lot of these sustained gains, these big gains, are going to happen on the daily and weekly chart. So that's why I want a daily and weekly chart. Now, the most important part to the strategy is environment. So what do I mean by that? So on the QQQ, and that's what you'll look at to get an environment feel, you want the 10 moving average, which is this orange line, and the 20 moving average, which is this red line. So the 10 EMA and the 20 EMA. The orange is the 10 EMA, the red is the 20 EMA. When the 10, we're going to make this really, really simple. When the 10 EMA crosses above the 20 EMA, that's a positive environment to start trading breakouts. When the 10 EMA is below the 20 EMA, that's a sign to not trade at all and just stay patient and wait. Because a lot of people, it's easy to make money in the market, but it's hard to actually keep it. Most people will make gains, but whenever a bad environment comes, they'll keep trading because they think that the environment stays the same and that breakouts still work, but it doesn't. You actually you'll make more money if you do nothing, as opposed to if you keep trading, you're actually going to lose all of those gains. So really important to know, 10 over 20 equals a positive trading environment. 10 under the 20 means you probably should just be cash. Now, we're going to nuance that a little bit. So what will happen in market corrections is the QQQ will bottom. Now, after a couple of days on the bottom, so right here on October 26, 2023, the market bottomed, right? Obviously, you didn't know at the time, but you hit the bottom. Okay, you have 1 day up, 2 days up, 3 days up, but it's all if you look at the volume on decreasing volume. So how do you know when to get risk on early? Well, on the 4th day, or on a day where it looks like the QQQ is going to put up a higher volume and it's going to close up over 1%, that is a time where you can start putting on trading breakouts. And also in confluence to this, if you go to the MMFI, typically what you want to look for is these oversold conditions where the MMFI drops down to 30 or to sub 20, and that's a sign that the market is coming to a bottom. So that's environment. Very simple. 10 over 20, good. 10 under 20, bad. Super simple. Now I want to talk about the actual setup. So I've got a bunch of examples here, and I want to just go through them. So this one is one of the most recent ones. This is one I've been trading since this bottom right down here. and I really just want to really ingrain the setup into your head. So, what is the setup? How does it work? You know, how do we trade this? So here's a general overview, right? You don't gotta stress out, like, am I learning it all? Just, just try to see where I'm coming from and just take it step by step. So stocks will make a big move up and then they'll pull back and consolidate. So you can see Rocket Lab right here put a big move up, pulled back and consolidated. During this consolidation, the stock will form higher lows, which you can see down here, higher low, higher low, higher low, and lower highs. Now, before the breakout, what you typically will see, and a good thing to look for, is an inside candle, which is a candle completely inside the previous candle. So the high is lower than yesterday's high, and the low is higher than yesterday's low. That's an inside candle. Or it'll be a super thin candle. So look how thin this candle is. In this case, it was an inside candle and a thin candle. So perfect. Now, you buy this. Once it gets above this high, you buy it on the 1 minute opening range high. Don't worry, I will show you how to do that. And then you simply just trail with moving averages. So you can use, or what you can do is you can sell half your position on day 3, and then you trail the rest of your position with the 10 EMA. And this orange line is a 10 EMA, so you made a big profit right here. But I'm going to show you the complete setup. So this was the first entry right here. Bam. 1 minute opening range high, so never got stopped out. Okay, now you're at a really good gain. It starts to set up again. Guess what we have? Thin candle, right? Higher lows, lower highs, thin candle, boom, another breakout. Okay, big move up, consolidation, higher lows, lower highs, thin inside candle, breaks the thin inside candle, boom, another breakout. Okay, consolidates again, right? Thin candle, inside candle, breaks out right here, bam. Okay, so pretty simple, right? If you didn't get that, we'll go through more examples, but basically what you're looking for is a big move up, a consolidation / pullback, typically on lower volume, a thinner inside candle before the breakout, and then you enter off of the 1 minute opening range high once that high or thin candle has been taken out. Okay? So, let's go to the next example. So, we have ASTS. This is another one I traded, made a lot of money on this. So, this one gave 3 different entries, and I'll show you each one. So, first of all, you have the higher lows, you have the lower highs. The first entry is right here. So, this day right here is where you'd enter. Thin candle, right on the 10. I also want you to notice that as well. The best breakouts will pull into the 10 or the 20, or both in some cases. So, you really want stocks that are going to pull into that 10, 20 EMA moving average. So as you can see, it pulled into the 10, broke out, and then kind of went sideways, consolidated, higher lows, lower highs. It gave a inside candle here. So this is the inside candle. The low is higher than this low. The high is lower than this high right here. So inside candle, you enter on the high right there. And then guess what? You get another inside candle. Again, high is lower than this high. Low is higher than this low. So another inside candle, you can enter off the high of that, bam, and then you get a big breakout, and if you trail the 10 EMA, this thing ended up closing up like 150%. So, you can see, move up, consolidation, super tight range, inside candle, thin candle, and then breakout, okay? Really, really just try to make it simple. Tesla, as you can see, guys, again, we're on the daily chart, so you want to be on the bigger time frames. Okay, Tesla, you have earnings, big move up, big consolidation, move up, even tighter consolidation. Inside candle, this is a failed breakout, but guess what? It reset up, another inside candle, lower highs, higher lows, broke out, and then just absolutely took off. Very simple. Keep it simple, guys. Next, we have NVIDIA. So this is the weekly chart on NVIDIA. And weekly chart setups make bigger moves than daily chart. Obviously, the higher the time frame, the higher the power. You guys want to remember that. But you can confluence them both, right? So big weekly move up, huge consolidation. This is a huge base. But look how tight it got. So you have the higher lows right here, lower highs, super thin candle on the weekly, and then guess what we saw on the daily? So then you go to the daily chart, okay, and you just buy through the trend line break. So you have your higher lows, lower highs. You could have actually bought on the high of this thin candle right here, but if you missed that, well, guess what? You can just buy on the break of the bigger base, and this made an absolutely monster move. And last but not least, we have a example from actually today. So I bought this stock twice. So first of all, we have a inside candle here, right? We have our higher lows, lower highs, big base, and then we take out the high of the inside candle. So you buy your first position right here. And I also want you guys to notice on these trend lines, you have lots of touches. So touch right here, right? Touch right here, touch right here, touch right here, touch right here. You know, kind of a touch right there. And then, so you buy it this day, put your stop loss over the day, and then you guess what? There's another pivot, bigger base right here, second entry, bam, you buy it again. And so, you know, it's never a bad idea to add into your winning stocks, right? So now I just want to show you guys how I would actually enter these like on a lower time frame. So we'll just go through the one today because I'll make it easy. Now, if you actually look at this thing, it's kind of like a flag set up right here. So this is where the actual entry is, like down here. So what you want to do is when it comes to this 1 minute chart, right? You should see, and I'll show you guys how to find these stocks the night before. But basically, what you're going to do, you come to this 1 minute chart, right? This is our trend line. This is our trend line. So you always want to wait for the first 1 minute candle to print. You don't do anything. So 9:30, you do nothing. 9:30, 9:31, you wait for the high of the 1 minute opening range high, which is the high of the first candle, to get taken out. And then also you want to see your trend line get broken, right? So in this case, trend line broken, 1 minute opening range high broken, you buy right here, and you can actually see the volume increase. Other people see that too, right? And so then it's really that simple. And then you put your stop loss over the day. So on this particular instance, you could have gotten a 1.9% stop loss, which means you could have gotten over half your account in this trade, only risking 1%. And guess what? The stock ended up making a 13% move. So that's over 6R, right, on day one. So that's why this is so good. And then if you want to sell this, sell half day 3, and then trail the rest on the 10 EMA, right? This orange line. You're never going to outsell a moving average, guys. Just remember that. Okay, so we covered environment, we covered the setup. I guess we can go and we can also cover risk management. So, how do I manage risk? It's really, really simple. So I literally will use my phone as a calculator, and whatever your account value is, let's say your account value is $10,000. Okay, in this particular case, we're going to use Lunar. Okay, so $10,000. How do I enter this? So, enter on 1 minute opening range high, bam. Stop loss is 1.9%. Okay, so you have your range tool. All you do is you take your account value, 10,000, and you just divide it by your stop loss. So in this case, divided by 1.9, bam. You get 5,263. So basically what that means is I could put $5,263 into this trade, and I'm risking 1%, which would be $100 on a $10,000 account. Super, super simple. All right, make sure you keep your trading really, really simple. Simple outperforms everyone. Okay, now how do we actually find these stocks, right? How do we know, okay, Ashton, I understand how to trade them, I understand the setup. How do I find them? So I have a screener right here. Filters. So you want to go to TradingView, you want to pull up this screener, and you want to use these filters. And then you want to go through these stocks every night. So you have volatility month. You want to put this at 4.2, volume times price, which is like the liquidity of a stock, 10 million to infinity, and then you want your stock above the 50 EMA. And how I go through this is what I'll do is I have my screen watch list right here. So I'll come down and I'll just add all of the ones except health stocks. I will not trade health stocks because they will gap down on you if you are not careful. So I just avoid them altogether. I avoid health stocks. So I'll add these to my watch list. I'll skip all the health stocks. Okay. And then I will, boom, get the rest of the stocks. Bam. And then I'll just go through all these stocks. I'll just look for setups, right? Just look for setups. One for tomorrow would be like Wolf. So, as you guys can see, you had your thin candle right here. It actually took out the high today, so you could have actually entered today. But then you have a bunch of touches right here, bunch of touches. So I would enter through this pivot right here. And if you look at the volume, it's on decreasing volume too. So this is a really low risk spot for this setup. So that basically covers the general strategy. Obviously, there's going to be nuances. There's going to be things that you can learn. If you guys want to learn further, if you want to further just educate yourself, you can join my Discord. It's highly worth it. If not, you can apply all these things yourself. And I'll leave you with this. Spend 2 hours a day. Spend 1 hour trading. Spend 1 hour screening stocks. Do that every day for 6 months. And I promise you, you are going to end up being profitable if you just wait it out, if you dedicate yourself, and if you just stick to the process. Because at the end of the day, it's just a process, and you get better with repetition. It's just like any video game. If any of you guys played Fortnite back in the day, how did you get better at building? You went into creative and you built, right? Same thing with trading. How do I get better at trading? You trade every day. That's the only way to get better. That's the only way to improve. You have to look for setups, train your eyes, and that's basically it, guys. If you enjoyed this video, please leave a like, comment what else you guys want to see. I love you guys, and thanks for watching.